What's going on, everybody, and welcome back to yet another video. Today I have a very special video for you guys. We're hopping right back into the charts and we are going to be going over price action as well as volume. I'm going to be going over the specific candlestick formations that I like to look for to enter for a high probability trade, as well as what I like to look for in the volume. So real quick, as always, before we hop into the video, if you guys do find value, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. But without further ado, let's hop into the video. Alrighty, so let's review the candlestick formations that I personally look for on an intraday basis. So the first candlestick formation that I like to look for when price is coming down towards support is going to be known as a dragonfly doji. Now with the dragonfly doji, it can form as a green candle or it can form as a red candle. What's important to know is that price opened either right here or right here, but then from there price went all the way down into these lows, and eventually sometime throughout that candle, buyers entered the market and drove prices all the way back up to here. So let's just say that we're looking at SPY and right here is 352. Price drops all the way down to 351.25, but then buyers push price all the way up into 352.25. Well, if we had a support area right here, that would validate that buyers are at that support level and we could go long with a stop loss right below these lows. So again, if we are coming down to our level of interest and we see a dragonfly doji, that lets us know that buyers are in that area. And again, this can form as a red candlestick as well. But what's important is that price dropped all the way down to here and then buyers drove price all the way back up. Now, the next candlestick formation I like to look for when price is coming down to support is known as the bullish hammer. Now, the difference between the dragonfly doji and the bullish hammer is the bullish hammer is actually going to have a wider body compared to the dragonfly doji, which is very little, kind of something like this. So you can see how small the body is for this dragonfly doji, but for a bullish hammer, it's going to have a larger body. That's how you're going to interpret the difference between the two, but the same exact rules apply. Price opened here, dropped all the way down to here. Buyers were strong enough to push price all the way back up into these highs. If this happened at an area of support or a Fibonacci level, VWAP, 8 EMA, whatever it may be, this more than likely is going to confirm an entry just based off the price action itself with your level of interest. And again, we're going to talk about volume here in a little bit, but these bullish hammers can also form as a red candle. It doesn't have to be green to be a bullish candle. It can also be red. The same rules apply. Price opened up here. Prices dropped all the way down into this low, but at the end of the candle, the buyers were so strong that they pushed price all the way back up to here by the end of that candle close. Now, the final candle I like to look for when price is coming down towards an area of support is going to be known as the bullish engulfing. Pretty much this is going to be one large green candle. Now, if we zoom out, I do want to show you guys actually a couple examples. So let's just go to a daily and see if we can find one on Dixie. But pretty much the way that I interpret bullish engulfing candles is just a very large green candle. It doesn't have to be one solid candlestick like this. And by definition, technically, the bullish engulfing is supposed to swallow up the previous candle, which is going to be red. But the way that I interpret them is just one large green candle. So to me, this is a bullish engulfing candlestick. To me, this is bullish engulfing. To me, this is bullish engulfing. Same thing over here, bullish engulfing, bullish engulfing. The point that I'm trying to make is if the candle is larger than previous candles and it's green, that's what I interpret as a bullish engulfing candlestick. And it doesn't always have to be a solid candle as well. We can have a little bit of wick. So if we were to have a lower wick down here, that would still be a bullish engulfing. Same thing up here, a little bit of a wick up here. As long as this candle right here is larger than the previous candles, I will consider it a bullish engulfing candlestick. So those are going to be the main candles that I look for when price is coming down towards support. Now, when it comes to bearish price action, I'm looking for price to come up to an area of resistance. Let's just pretend that this is resistance right here. And the first two candlesticks that I'm going to look for at resistance is going to be known as gravestone dojis. So as we can see, these candles have very small bodies. However, throughout that candle, price came all the way up into the resistance, but then the sellers drove price all the way back down. So because this is a red candle, price opened at the high. Eventually throughout that candle, the buyers pushed price all the way up into this resistance, but the sellers overwhelmed the buyers, drove prices all the way back down, and the candle closed red down here. Now again, this can form as a green candle as well, but what's important is that price was pushed all the way up into these highs. However, the sellers were so strong that they drove prices all the way back down. So that is the first candlestick that I like to look for at areas of resistance. Now, the second candlesticks that I like to look for are known as bearish hammers. Again, these can form as red or green. What's important is that price drove all the way up into these highs, but then was sold off and closed down near these lows. Again, the way that you're going to tell the difference between a gravestone doji and a bearish hammer is for the hammer, the body is going to be wider compared to the doji where the body is very slim, just like this. So if price is coming up to resistance, I want to be looking for bearish hammers. And if you haven't already, I highly suggest checking out my new book, The New Age of Day Trading, the Ultimate A through Z Trading Guide, officially on Amazon. In this 325-page book, you can expect to learn more about my day trading strategy, the exact indicators I use, price action that I look for at my levels of interest, which we're kind of discussing in this video, Fibonacci retracements, sniper entries, stop loss strategies, a lot about SPY, QQQ, SPX, ES, and NQ, and so much more information. So again, if you guys want to check it out, The New Age of Day Trading, the Ultimate A through Z Trading Guide on Amazon. The link will be down in the description. Now, the final candlestick that I'm going to look for as price comes up to resistance is going to be a bearish engulfing candle. This is one solid sell candle, but again, there can be a little bit of wick, so there could be a tiny wick down here and maybe a tiny wick up here. But the way that I'm going to interpret a bearish engulfing candlestick is it is one large red candle. And just like the bullish engulfing, I'm going to compare it to other previous candlesticks. So let's go to the daily, see if we can find a nice bearish engulfing. And if it is a larger red candle compared to all previous other candles, I consider it a bearish engulfing. So here's a bearish engulfing right here. Here's a bearish engulfing right here. Here's another bearish engulfing right here. Here's another one right here. Another one right there. This one, maybe I'd consider that one. But the point that I'm trying to make is the bearish engulfing candles have to be larger than previous candles. Now, some other things that I like to look for is if price is coming up towards resistance or down to support, I do like to watch the wicks to see if there are buyers or sellers interested in the market. So not always are we going to develop one of those candlesticks that we just discussed. Say we get a nice green candle up here, and then we just have a nice upper wick that goes into the resistance level. It's not always going to be one of those previously discussed candlesticks. It could look something like this. Or if price comes down into support, it's not always going to be a bullish hammer. It's not always going to be a bearish engulfing or a dragonfly doji. We could slightly break below the level, but then we have a nice long lower wick to the downside, which suggests that buyers are in the market. So we also want to pay very close attention to the wicks because that's what's going to tell us the story. If price comes down to support and we have a long lower wick, that suggests buyers are in the market. If price comes up into resistance and has a long upper wick, that suggests that sellers are in the market. If we come up to resistance, it doesn't have to be a red candle to tell us that sellers are in the market. If we come down to support, we don't need it to be a green candle to suggest that buyers are coming into the market. These candlesticks can form and be either color. But what's going to confirm the trade is first the wick, and then the second thing is going to be volume. So say we're looking at this green candle right here, and we're just going to put volume down at the bottom portion of this screen right here. So say we're going up off of strong volume to the upside, and then we go into resistance and we start slightly pulling back right here, and we only get like a very tiny volume bar like that, right? I don't necessarily care about shorting something like that because the volume was so light. However, say we were going up off of decent volume and then we just come up into this area. Let's draw some previous volume bars just so we can put this into interpretation for you guys. Say we get a volume bar right there, and then we get another volume bar right here about equal size, and then we get another one right here, maybe even a little lower, and then price comes up into resistance and we have this huge sell volume right here. Well, now from here, what we can do is piece together the price action on the screen and the volume. Now, this is where I see a lot of traders start getting mixed up because they'll say, okay, well, it's a green candle and it's green volume. That must mean it's going up. No, because if you look at this wick right here and you have that level of interest, look at the wick, look at the volume. What does this actually suggest to us? Sellers are up in this area. A majority of this volume probably came from the sellers at resistance. And again, I see a lot of people get that confused. Just because they see green, it doesn't mean that it's going to continue to go up. Look at the price action, look at the volume. Because if you went long here, you probably would have been stopped out. Now, this is a made up example, obviously, but from my experience, this tells us that sellers are active in this area, and we should actually be looking to get short with a stop above this high to then hopefully catch a move down. Now let's do the same thing right here. This could actually be a red candle. So let's just go ahead. Let's switch it up real quick. Let's make it red. Just because it's red doesn't mean that price is going to continue to go down. So say we're looking at this, say we have, a green candle here and then another red and then a green, right? Say we get a couple volume bars, we have one right there, and then we have another one right here. And then price finally comes, and let's just actually move that. Let's move that. Let's say price comes down and it hits the support. And then all of a sudden we see a large volume spike like this. Again, don't get this confused. Just because this is red and this is red does not mean that all of this is selling. Because if we interpret the wick with the volume and the overall price action and where we're at on the chart, well, we came down to support, we have this long lower wick, and we have very heavy volume. What does this actually suggest? Buyers are in this area and they are getting their orders executed. So we then can conclude that a majority of this volume is actually buying. And again, a lot of people get that confused. It doesn't matter if it's green. It doesn't matter if it's red. Piece together the volume with the price action. Now, if this was a green candle, obviously it would be better because price opened right here, price dropped all the way down to here, and then they drove prices all the way back up to here. The buyers were strong enough to drive prices all the way back up to here. So if we ended up getting a green volume, then obviously that would be great. But again, the point that I'm trying to make is that it doesn't always have to be green. There's so many times where price will come up to my resistance and we'll have a green candle, but a long upper wick and heavy volume, and I go short. Or there's many times where price comes down to support and we have a red candle with a long lower wick but heavy volume, and I end up going long. So it's piecing together the price action plus the volume and your levels of interest, which is going to help you find a high probability trade. But that is going to wrap up this video. Hopefully you guys did find a lot of value in this. If you guys did, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. I do have over 800 videos on this channel teaching you on how to trade for completely free. Plus, I go live every single morning at 8 a.m. Eastern time and give you guys a completely free watch list for the day. So make sure you guys tap in. Everybody have a blessed day, and I'll see you guys in the next video.